Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. The people have spoken. I wanted to know which company you wanted to hear me discuss tonight, whether it was going to be Netflix or Tesla. Tesla announced their earnings, I think at like 4 or 4:30 at some point today, hours ago at this point. And y'all said y'all want me to break down Tesla and kind of pull out the news and notes that I found were at least enlightening, and that's what we're going to do today. So I went through, started at investor relations, pulled out some things, then went to a few news sites just to see if we were on the same page or if there was something that I missed. And again, I just collected, I would say, my top 5 or 6 thoughts, and give you my opinion on whether I think it is a good buy or not. And then the other thing that I will mention here is that I do own shares of Tesla. I bought them when they were added into the S&P 500. I think this was late 2020. That was one of the things I was waiting on, and that's when I got in. And I do dollar cost average there as well, and it's like every 2 weeks. It's a separate app, not on public, and I just add little bits here and there, and it's just on autopilot. The other thing that I'll disclose is, you've been watching any of my listening to any of my podcasts, watching any of these broadcasts here on YouTube, then you know I'm not a fan of Elon Musk. But for what I do is I separate the CEO and the person that I may or may not be fond of from the numbers that I see and the chart that I see and how the stock is doing. That's my job. I separate those two things out. So I'm trying to be as unbiased as possible. But again, I want to disclose, I don't like him, but I also own shares of Tesla. So there you go. All right, so here are the things I pulled out. First thing was that they had a record number for production. They have put out more cars than they have ever, year over year. So from Q2 of 2022 going back to Q2 of 2021. That is impressive, especially when you consider the whole supply chain issue. It feels like it has been hurting everybody but them. Now, they have been hurt by it in some ways. They've had a bunch of shutdowns at their Shanghai plant. They mentioned that a few times on their investor relations deck. I think it was like 30 slides long, where they talk about what's going on, what they're looking forward to, and what were some of the challenges. And that was a part of it. They also opened a factory in Germany, which should help them to grow further, faster in the next few years. And I'll discuss a piece that really stood out to me there as well, which I thought was quite interesting. But record production in a year where it's been difficult to get all the chips and things that you need to produce these cars, they've been able to do it a lot better. A part of this is how they manufacture their own chips, and if you manufacture it yourself, it makes things a lot easier in a time like this. So super interesting there. Very impressive. I have to say, it's very impressive that they were able to do that in this time and space. And that is something that is quite impressive. That is if I were to go positive and negatives, is obviously a positive here. The second thing was that they had a 42% increase in revenue. That means they brought in way more money than what they did year over year. Again, if you were to ask me what I would have guessed this number was going to be, given the backdrop that the stock is down this year, almost 30%, given the backdrop of what we think could be happening with the recession, what we think could be happening with interest rates, and all this stuff, and they brought in 42% more than what they did last year. This would be a super check in the positive direction. The downside to this, I'm skipping around in my notes here, is margin. Their margin took a step back. When we talk about margin, this is the percentage that you make off of your product. So let's say I buy something for 100 and I sell it for 110. My profit is $10. That margin is 10%. Their margin took a step back. Now, obviously, right, the more that item cost, the smaller my margins are. Because of inflation, they've paid a lot more for a bunch of different things. That takes a step back and cuts into their margin. They also cited that higher competition could be a part of it too. So you've got, I invest in Ford as well, but you got Ford, GM, Toyota, and every other car out there that's pushing out electric vehicles, and people have more options now than what they did, let's say, 5, even 10 years ago. So their margin is slowly declining to a degree. I'm not overly concerned about that. I do believe that the competition is going to get even more fierce in the next 5 to 10 years. But it is something to note that margin is starting to slow down just a bit. Another piece of this, which I didn't number it here, is that yes, year over year, 2022 to 2021, going backwards, that growth is significant. But if I start to look at quarters Q4 2021, Q1 2022, and now Q2 2022, income and the number of production is not all that impressive. It's actually slowing down just a bit. I can't necessarily tell if that's a trend. Perhaps Q4, maybe Christmas bonus or something. People are just buying a lot more cars at the end of the year than what they are in the middle of the year. That I can't tell, but that is something to notice. It's how you look at the numbers. So if I'm looking at, again, Q2 to Q2, 2021, 2022, things look amazing. If I'm just looking at the last three reports in the last three quarters, I could take a pessimistic view here and it may not be as impressive. I think a better question would be, how do they stack up every year? Are Q4s always for Tesla? We've had enough of these now. Are Q4s always strong? Yes or no? It's a question that we'll probably answer in the members only once we get the 10Q, that is their quarterly report they have to file with the SEC, gives us way more information than what we got today. Again, that's another video when we do an even deeper dive. We're just doing high level things here. So margin, taking a step back just a little bit, I am personally not concerned there. I understand why your margins would be a bit smaller. I'm not going in order here, but margin was one of the things we talked about. The 42% increase in revenue, highest production year so far. Those three things were really good. Now, the next thing that I noticed is, again, I'm digging around, I'm snooping, I'm doing my job, right? This is something that I think separates me just a little bit from everybody else you might be paying attention to. There are an approximate number of zero insider buys, which means that Elon Musk, which makes a lot of sense, but Elon Musk has not bought any shares of Twitter. He's not acquiring more of his own company. Now, that actually makes a lot of sense because he had to sell shares of Tesla to pay a tax bill, I think, at the end of 2021, but also to buy Twitter. He had to sell this. He had to sell a lot of Tesla to buy Twitter, and we'll see where that goes. So that makes sense. I'm not really concerned whether or not Elon Musk himself is buying, but I didn't see any insider buys at all, which it's weird. I can't say that I've tracked insider buying for long enough to say I've never ever seen it, and that is something that stands out. But it is, to me, so far it is relatively rare that no insider, obviously not the CEO, not the CFO, not the chief supply chain officer, nobody bought more of Tesla in the last year. That's just interesting. Now, yes, people sold. Again, Elon was one of the biggest sellers, but again, I don't learn that much. I wish I could. I don't really learn that much from that. But it's just curious, especially when things are trending up, at least financially. 42% increase in revenue, record production. They know this. They work there, right? And they own 10% or more of the company. So it's just interesting. I can't say concerning, but it is interesting. That was something that stood out in my notes as I'm going through it and looking into Tesla. So if I would just circle that one. Just, to me, that's odd. Next is that they sold 75% of their Bitcoin holdings. This ended up being about $963 million. Now, in their notes and in their investor call, if I'm not mistaken, they said that this is not a referendum on Bitcoin. It's not us losing faith in Bitcoin and all that stuff. And that's what they said. But in reality, think about it like this. They've converted that Bitcoin into $960 some odd of cash, which means that it was at least, I can't say at least, but it was definitely a lot higher because Bitcoin is down like more than 50%, at least earlier today it was. So this was 50% higher at one point in time. But at the end of the day, if you are a company or even a person, if I put my money in a bank that I can use to go invest in other stuff, hire people, do all that, I don't enjoy losing money at the rate that Bitcoin has been falling. There's at no point do I want to say, hey, I've got $10,000 in savings for an emergency, to hire somebody to fix the house or what have you. And I turn around a year later or turn around several months later and it's down 20%. That's not okay. I had 10,000 and now I get 8,000. I needed that money, right, for something. So the interesting thing there is that they sold 75%. They still have some. That's fine. I don't really care whether or not they save a little bit of Bitcoin for whatever rainy day, I suppose. But it does show a bit of maturity, I think. And it felt like a gimmick that they just did it just because Bitcoin was up and that's just what they believe in. But to see them say, look, we're going to be more mature, look at the market and say, look, I'm going to make a change here and at least retain some true value, I think is very important, and I think a decent move. Am I selling 75% of my Bitcoin? No, but I also don't have $963 million in Bitcoin either. I don't even know if I have $900 in Bitcoin. Actually, no, I do have more than $900 in Bitcoin. I haven't checked in a while, so it might have dropped below that. But last time I checked, it was a little over 1,000. So we'll see that. All right, so the next thing here, and my handwriting is terrible. The next thing here is that they predicted, or they are projecting rather, a 50% growth over the next several years. And I want to pull out their exact wording. So give me one quick second as I find that note. And when I do, I will paste that here so we can all read this together. But essentially, when they talk about volume, so we plan to grow our manufacturing capacity as quick as possible. Our multi-year, that was the key word, multi-year horizon, we expect to achieve 50% average annual growth in vehicle deliveries. That would be great if you could do that. That's also a really high number. 50% annually, you're just delivering just more cars like that. Now, to their credit, you are opening, they did open rather a factory in Germany. That's there. At some point, the shutdowns in China over COVID-19 has to stop at some point. So there is a path. But let's say that between now and 2023, you get the first 50%. It gets harder to get the next 50% and the next one and the next one. So I don't know if they're looking at just 2 or 3 years or just, 10. I'm not sure. But I would imagine that's really difficult to chase after. But they don't just throw stuff out here to throw stuff out here. These are two investors and media. They don't come out here to embarrass themselves, or at least they don't try to anyway. So that's something that stood out. I like it, but again, it's just a forecast. Nobody knows what's going to happen over the next year, and we don't know what the economy is going to look like and whether or not that is going to impact Tesla. So that was something that stood out. I'll do a quick recap and then give you my thoughts on whether I think it's a buy or not. Record number of production, great. Brought in 42% of revenue. Margin took a step back. There are no insider buys, which is interesting. They're looking to grow 50% year over year, and then they sold 75% of their Bitcoin. Those are the things that stood out. Now, over the last 6 months, Tesla is down about 30%. If I look back and say over the past year, they're actually up 14%, which is better than the stock market, at least over the last year. Last 6 months, Tesla's doing just, I won't say a bit worse, but it is doing worse. And we'll see what it does in the morning. I would expect it to go up, but you never really know. It's earnings season. Things are quite wild. Now, for me, again, I've disclosed I do own Tesla already, and I dollar cost average every 2 weeks or so for that particular stock. I think if you are a long-term investor, I think this can make a lot of sense, especially over like a 2-year time frame, because I do not know what is going to happen between now and the end of the year with interest rates and inflation, and then the recession announcement. Now, the economic thing, the case here that I really don't want to call this recession proof. I don't want to get into recession proof conversation for this particular company. However, people who buy Teslas are usually pretty wealthy, and recessions impact them a lot less than everybody else. I know most people consider this a tech stock. Personally, I don't. I think it's more of a manufacturing stock. I see it more of an auto stock, just like Ford and GM. But Tesla gets, for whatever reason, I guess it's just all electric, which is fair, but they get the tech tag. And I kind of think that that's why they're down more than what they should be. This feels like it's like overreaction. There's no logic to me behind the fact that you increase your revenue. You brought in 42% more on the top line. That's before taxes and all that kind of stuff. So you brought in 42% more, but the stock is down. And this is just 1 quarter, by the way. But the stock is down 30%. You produce more cars than you ever have in a space in a year where things are more difficult for almost literally everybody else, and the stock is down 30%. This says undervalued to me. This says you get it now. This is that buy low moment, and a year from now, 2 years from now, 3 years from now, you're really going to set yourself up for what we would think, especially if they're going to grow by 50%, you're setting yourself up for a big payday. On paper, that is what this says. That is what the situation says. That is not a guarantee by any stretch of the imagination. Now, the last thing I'm going to leave you with is this. On August 4th, they're having their shareholder meeting. They're going to vote on whether or not they're going to do that 3-to-1 stock split. That's out there, okay? I've explained stock splits a bunch of times because everybody feels like they want to do a stock split this year. That is out there. Will that be a Cat 1? Will it be approved? I don't know. I don't know what investors are going to vote for. I own shares. I don't own that many. So my vote is not going to sway the election on whether or not that vote occurs. I don't know what I would vote for. I feel like I should vote no, but again, who cares? And whether or not you should buy it before or after the split, again, we know statistically if they split, odds are, based on previous data, they're going to outperform and do better than the overall stock market by whatever the percent was. I think it was like 11 or something. Whatever the percent is, if they split, they will likely outperform. So says history. We also don't know where the market as a whole is going to be based on the things that are coming out right now. We don't know. But I think right now it is a buy. I can't tell you where it's going to be in August. I don't know where the market is going to be in August. I don't know where Tesla will be in August. What I am looking at is between now and 2023, 24, and 25. If they continue to grow at this pace, if they live up to expectations or to their own standard and grow by 50%, this would be the time to get in. The safest thing to do with a company like this, keep your holdings less than 5%. You don't want to overweight yourself and put 40% of your net worth in one company. You definitely don't want to do that. You want to make sure you're still diversified. So should you be wrong, it's not going to ruin your entire financial future. For me, I think I've got maybe 1 or 2% of Tesla. My limit is 5%. Once I hit 5% in any one company, then I need to sell a little bit of it and diversify elsewhere because you don't want to take on that level of risk. Now, if you want to do more, you do more on your own. I'm just telling you, what works, right, over time. So that's just me. So those are my thoughts. I think it is a buy right now based on what we see, and I would not be grading this assignment. I would not be judging myself, feeling good or bad, until this time next year. So perhaps we can come back and check out whether that panned out, and we'll see where the entire economy is at that point in time, because there's a lot of other factors that can impact whether or not this pays off for Tesla. All right, so last thing we will talk about before we go, I've got a few more breakdowns. I have at least 2 deep dive company breakdowns that we'll talk about. If you want me to do a deeper dive into Tesla once they get their 10Q out, which is always fun for me, feel free to let me know in the comments below. Make sure that you join the members only community. We did a fun breakdown of one of my favorite websites where we talk a lot about how do you find out what billionaires are investing in, and we found out something really interesting about Coca-Cola, Dr. Pepper, and Keurig. That is a publicly traded company for those that didn't know, and there's been some very interesting activity there. So I think that breakdown was close to 18 minutes or so. We talked about everything about how to know exactly, not just Warren Buffett, but about 50 other billionaires, what they're investing in, what they're buying, what they're selling, how you can find out and make some moves based on that. That is in the members only group right now. Next week we're going to do some more breakdowns. So make sure you join. Links right here. Listen in the description. And I'll see y'all there. All right, that's it for me. Talk to you later. Bye.